Stocks are mixed for the day. The S&P 500 down, the NASDAQ 100 up, bonds are up, gold is up. Let's jump into the markets on this second day of the week. What we see going on Tuesday is basically a continuation on the S&P 500 of down movement. We do have a nice large down candle that's drawing so far. Derivative oscillators just about flat, still losing a little bit of energy, but that price percent oscillator is spiking down. Wasn't down much for the day, 0.11%, but again, continued down movement showing strongly in this weekly candle. On the two-day chart, we just finished drawing, of course, today, the latest two-day candle. That's down quite strongly. Derivative oscillator gaining momentum. That Heiken Ashi candlestick's quite a large one of the larger ones we've seen over the last few weeks. Derivative oscillator heading down, price percent oscillator heading down. So we take a look at that 4-hour chart. What do we see? Well, we haven't had a pullback yet, so we don't have a safe jumping in point. We're just continuing to watch things trudge down. We want to see a pullback happen before we feel comfortable jumping in at this point, because we are long in the tooth, of course, since that weekly vertical crossover going down. But didn't it serve us well? We did so well with that. When it originally happened, again, we don't get greedy, we stay smart. So, and don't forget, when I see the purple line here, don't forget at the end of the month, guess what we have for you? We'll have that quarterly chart. It will be closing for the year, for the fourth quarter, and we'll be reviewing just what is going on. And those of you who know about the quarterly chart, and I'll just sort of, for those of you who don't, it is our magical chart when it comes to the S&P 500 over the last 20 plus years. It shows you when to get in, when to get out, the Trump effect. It has been preternaturally accurate. So we'll talk more about that, and you can sort of get a foretaste of what might be going on at the end of the month. Now, we'll see how the month plays out. It ain't over till the fat lady sings, so it hasn't happened yet, but we'll continue to watch things. Be ready for that. Okay, we go from the S&P 500 to the NASDAQ 100, the tech stocks. They were up for the day, 0.63%, but again, we still have a down candle drawing on the weekly chart. Derivative oscillator losing downward momentum. That price percent oscillator is still going down quite strongly. We go from the weekly to the two-day. What do we see going on there? Well, of course, one of the bigger candles we've seen over the last few weeks. I guess the one back ending the 29th of October was bigger, but again, one of the bigger two-day candles. And of course, we now have a two-day crossover going down. So we'll get rid of our two-day trend line. And of course, we will move our two-day vertical crossover line, and we will edit our arrow to actually be pointing down. So that sets us up for a potential down move. Let's go, and again, derivative oscillator flipped over negative, which is what we want to see, and the price percent oscillator crossed over going down. What's going on the 4-hour chart? Well, we saw down movement in the morning and then again in the afternoon. Derivative oscillators gaining downward momentum. That price percent oscillators moving down. So we'll just continue to keep our eye on things. We need to pull back again, just like on the S&P, for a jumping in point. We'll see how long this current down movement will go on, and hopefully we'll get that pullback in the opposite direction. Then things will launch back over going down, and that would, of course, an example of that we see back on the 6th of December. That again would be our point for jumping in after the pullback occurs. So we'll wait and see. We'll let you know as we move forward. If you haven't read our book, of course, we talk about these things in the book. That book is available. Look in the show notes. You can sure purchase yourself a copy, and we appreciate everyone who supported us in that way. You can also support us on our Patreon page. Now let's go to TLT, 20-year bonds. Of course, we're going into the 6th week of what appears to be more up movement. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. A green candle forming. We go to the two-day chart, and of course, it continues to push up. Another two-day candle, a green up candle. Price percent oscillator heading up. Derivative oscillator losing downward momentum. We go to the 4-hour chart. What do we see? We're still waiting for a crossover. Had some up movement in the morning and the afternoon, but not strong enough to cross over yet. Get ready to potentially pull that trigger if indeed we have that crossover going up on a practice trade. So we are in the middle of a pullback. I was talking about a pullback on a chart that is going down. This is a chart that's going up. So of course the opposite is we're in the pullback, things are going down, and as it starts to cross over going up, that would be your jumping in point. Once that blue line crosses over the red on the 4-hour chart, it could happen in the morning and potentially give you a jumping in point for a practice trade in the afternoon. We'll just keep our eye on things and see what we see. Lastly, we go to gold. And oh, by the way, the TLT 20-year bond's up 0.63%. Gold up 0.24%. Third week it looks like so far of up movement. Derivative oscillator gaining upward momentum. Price percent oscillator heading up on that weekly chart. Green open box candle. 2-day chart. Gold is really sliding sideways. We can see that. We topped out actually with the highest high lately at 118.23, and that was back on the 2-day candle ending on Monday the 10th. And what we see happening so far, 118.20. So we will, just 3 cents above. So close, but we see the derivative oscillator flat. Price percent oscillator is heading up, a green open box candle. So that's good to see after a red open box and a red down candle. And then what do we see going on that 4-hour chart? Getting closer and closer potentially to crossing over. Derivative oscillator still negative. Price percent oscillator looks like it's trying to cross over. Don't like seeing those Bollinger Bands pinched in, losing a good bit of volatility there, but we'll just wait and see. Maybe a jumping in point in around noon tomorrow if gold continues up. So keep your eye on things. Maybe you'll have a chance again to do a practice trade on gold also. That's where we are as we end the day on Tuesday and go into Wednesday. Thanks so much for being with us. Again, you want to support us, that Patreon page link is available in the show notes. You can also see links to purchase the book, Charting Your Way to Wealth, in our 7th printing. And of course, your daily market worksheet, weekly market worksheet, and trade worksheet PDFs are available there, plus all sorts of great stuff, $25 off if you want to subscribe to the charting software that we use, TC2000, of course, freestockcharts.com. We actually have the charts that we use. We have a link to that in the show notes also. So you set it up and then download our link to our layout, and you got everything we use every day. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters, and Merry Christmas.